of how he is handling his job by a margin of 56% to 43%. They point to the ongoing pandemic and soaring inflation. Only 28% of Americans say they want Mr. Biden to run for re-election, including only 48% of Democrats. Greg Clugston, Washington.
A judge has denied a request to stop a county from buying land for a planned spaceport near the Georgia coast, dealing the latest blow to the project's opponents. In an order Thursday, Superior Court Judge Stephen Scarlett denied a request to restrain Camden County from closing on the land deal until a referendum that would let voters weigh in. Another down day on Wall Street with the Dow dropping 313 points. More on these stories at townhall.com.
Balance of Nature's fruits and vegetables in a capsule, changing the world one life at a time.
I'm 55 years old, and I've been on the Balance of Nature for quite some time. I'm very healthy for my age. You know, I try to live a healthy lifestyle, and the Balance of Nature is definitely a part of that. I do work as a physical therapist, and I do actually some personal training on the side. So I've come across supplements products for the 30 plus years I've been in the industry. And, you know, Balance of Nature is truly one of the best. I don't take a ton of supplements, but I take Balance of Nature because it's real and it works.
Get a wide variety of all your daily recommended servings of whole fruits and vegetables without having to leave your home. Right now, Balance of Nature is offering free shipping and 35% off on any new preferred order. Call 1-800-2468-751. That's 800-2468-751. Or go to balanceofnature.com and use discount code HEALTH.
Portions of the following program may be pre-recorded.
The Word on Wealth with Gary Quackenbush is sponsored by the Word on Wealth Radio Network. This is the Word on Wealth with Gary Quackenbush of GQ Law. Gary is a San Diego financial solutions attorney protecting people like you. The Word on Wealth team of financial experts is here to answer your questions and help preserve your family's financial future. Now, here's Gary.
You're live. All right. Welcome, everybody, to the Word on Wealth. So good to have you along today. We are here every day, Monday through Friday at 2 o'clock on these same stations. Today, I have a very special day. We have like half the team at GQ Law is here. We're doing these radio shows. Lately, we've been doing them live on YouTube as well as obviously live on the air. So I have with me my associate attorney, Rich. Rich, how you doing?
Good, Gary. How are you?
All right. Good to have you along. And we have Edgar, our paralegal.
Yep, that's me.
How you doing, Edgar?
I'm doing fine.
So today, a lot of times what we're trying to do on Thursdays is we're just trying to kind of mix it up a little bit. Today, that's for sure going to happen because we are talking about tax time coming up. Like right now, we're January 20th, and most of you that are tax professionals or that are thinking about doing your own taxes, it's tax time, bottom line. W-2s, 1099s, all those have to be out by December or by January 31st. So that is less than a week away. Those have to be in the mail by the 31st or suffer some type of penalty. It's like $50 each or something crazy. Actually, I think it's gone up higher than that, but you have to get those in the mail. 1099s, W-2s, K-1s, all that stuff has to be in the mail by January 31st. And for most tax professionals, this is the time of year when things get crazy. They're sending out their tax organizers to help their clients get organized so they can do their online or their in-person interviews for tax season. So the reason we are three of us here today is because Rich Mathurin here at GQ Law is the head of our tax legal department. Tax meaning anything to do with taxes, and legal because he's an attorney and we deal with legal issues. So Rich, I wanted you to kind of just kind of describe it, because we use tax legal like, oh, everybody knows what tax legal is. And after a while, our clients understand what it is. But can you just explain basically, like in the tax legal department, like what are the things you typically deal with in like your regular week?
We have clients that come in that have issues with the IRS. They have tax balances owing or missing returns. Also the state of California, the California Franchise Tax Board. And what we do is we analyze their situation in terms of what they owe for how many years, and try to find a program that would fit for them to get them back into compliance with either the state or the federal government. And we have a lot of tools to do that. We have a tax software that we can run reports. And there are a number of different options available to clients, whether it's setting up a payment plan, possibly doing a settlement with the IRS, or possibly if the client does not have the means to pay, maybe getting them into what's called a non-collectible status.
So then as far as like, so typically in the tax legal department, we're talking about people, sometimes they haven't filed in what, 1 or 2 years?
I've seen 10, 20 years.
Gary, turn his mic up.
That's crazy, huh? So basically, okay, so basically wrong one. Okay, so 10 or 20 years sometimes. So it probably seems really unrealistic for people to believe that people don't file for 10 or 20 years, but I mean, I know that's one of the things that we deal with. So let's just kind of go with that. So people haven't filed in a long time, people that might owe money to the IRS or to the state of California. I guess then just regular people too that need to file a tax return. We deal with that every once in a while.
Yes, we have an enrolled agent that is affiliated with our firm that we can refer out clients to have taxes prepared. He's very good, efficient, and friendly. Or we are, Gary and myself are members of the California Society of Tax Consultants, and we can refer to a number of different tax practitioners throughout San Diego County. So if they have missing returns, I think the IRS is really focused on the last 6 years. But if you have missing returns and the IRS filed returns in place of the missing returns that are maybe 10 years back, and they've assessed taxes that you don't feel you can owe, you can have the tax preparer file a new, do a amended return and file that in place to fix that, what they call a substitute for return.
Okay. Now, appreciate you saying that. So then, Edgar, we have you here. And you've been good on the show. We kind of bring you in for everything. The reason Edgar comes in for like almost everything is because we have him doing a lot of different things.
That is true.
But talk to us about like your role in the tax legal department, some of the stuff that you end up working on.
Yeah. So as Gary has mentioned, I'm a paralegal here at
Barely hear him.
at the law firm, and that includes me helping Rich. And the ways that I help Rich is helping him fill out the documents and putting client information into
Have him
the
get closer to the
forms
mic.
that we have to submit to the IRS, getting bank statements or any other requested documents that the IRS requests from the clients, and then putting it all in a packet together and filling out the forms, running the IRS transcripts for our clients, and yeah, just making sure we get all the information from the clients. I think that's one of the biggest things that I do in the tax legal department.
Because so you can kind of see, listeners, when we're talking about this kind of thing, it is fairly complicated. Some people, you try to do it yourself, but it's kind of like if you, I suppose, if you were trying to figure out what's wrong with your car and you wanted to do it yourself, that's usually not a problem if you know what you're doing. But you know, if it doesn't start right, then what do? Replace the spark plugs. Oh, that didn't work. Okay, let's replace the coil. Oh, that didn't work. Let's replace the wires. That didn't work. And you end up kind of, a lot of times with solutions is people working it themselves, they just go through they try and try and try and try, and eventually they might get there. One of the things that we are able to do is really target, like Rich was saying, is target what's wrong by getting reports directly from the IRS. Now, one of the things, I handed Rich a news thing today, so I want to get Rich's reaction. I got an IRS news thing from one of our news feeds at the IRS, and it says IRS is to require facial recognition to view tax returns. So what's your initial reaction to that, Rich? Facial recognition to view tax returns.
Well, I think there is a lot of fraud going on, throughout the nation. So I think they're trying to make sure they protect the taxpayers' confidential information. Another thing that Edgar does for us that's very important is he gets a power of attorney for both the federal and the state, and that allows us to access your records, speak to the IRS on your behalf. But it is a very, very difficult nowadays to be able to access records or reach the IRS yourself. We do have a direct tax practitioner line that I can call to speak to a representative or to speak to collections. And I think that's one advantage. Nowadays, I've been told by clients that can take them days to try to get through to somebody, and then they still aren't. But, I usually, if I'm patient, I can get through during a normal business day.
And I'm wondering with this new thing, if they're going to do facial recognition, It'll be interesting to see how they work power of attorneys, right? Because we do power of attorney because it's signed, and there's a process to make sure that they know who we are and that type of thing. I see news like this, like they're trying to make it so there's less fraud, and so you have to have facial recognition. And I'm just kind of wondering, we have to put our face in the computer every time. It's kind of funny, but it's like we talk about with our cybersecurity guy that comes on, Craig Smith from Borderland. He talks about the big thing is there's a lot of cyber theft. There are organizations in other countries where their job literally is to professionally try to hack computers over in the US. And one of their big targets is tax professionals. So we figured in tax time, we would talk about this kind of stuff, and just hopefully you guys get your returns done on time, get them in. Don't string your tax professional out to April 11th and then turn in your stuff. Get it done early, be nice to the tax professionals. So a couple other things that changed in one of our news rags. I want to talk briefly about some of the changes that happened in the tax laws. There were a lot of changes that came in with some of the recent tax bills over the last couple of months. The tax update seminar is the one that we were just at in the first week of January. There's been changes even since then. One of the things that I do like, and this is related to the estate and gift tax returns, is that the amount that you can receive or give after your death. So basically, this is the estate tax transfer exclusion is now $12,060,000. So we don't have to worry right now. If you have less than $12 million net, you're probably there, right, Rich? Less than 12 million.
Working my way up there.
Okay, he's working his way up there. But basically, if you have less than 12 million, we don't even have to worry about you're not going to have to worry about gift taxes, estate taxes, that type of thing. The other thing that changed was the annual gift exclusion went up to 16,000. It was 15,000. And we're gonna do a break right now. There's in about a minute, and then I want to talk to you when we get back about the gift tax exclusion, what that means, because there's a lot of confusion on, does that mean I can only give away 16,000 or whatever? We'll talk about that when we get back. You're listening to The Word on Wealth, sponsored by GQ Law, and you have me, Attorney Gary Quackenbush. We have Richard Mathurin and
Edgar Hernandez
from GQ Law. And when we come back, we're going to talk more about the gift tax exclusion. Okay. To have a consultation with me, with our firm, regarding tax problems, tax returns, tax preparation, tax issues, even estate planning, call 855-500-TRUST. 855-500-TRUST and get a free initial consultation. Rich will take the interview. He will do the analysis to figure out what is the situation, what returns are missing, what your income missing. We can get a lot of information with our reports. So call 855-500-TRUST, 855-500-TRUST, and you can get your free consultation to figure out what your tax situation is. If you're looking to have your tax estate planning trust reviewed, we're still doing reviews for free for our listeners. And the number for that is 855-500-TRUST, or go to our website, gqlaw.com. That's gqlaw.com.
From San Diego, this is the Word on Wealth Financial Network. Call and ask your questions about effective stewardship in your family finances, business, and retirement.
Hello again, friends, and for years I've been telling you about Jim Robison, the Medicare Answer Guy. Not only do you hear him regularly answering your questions on the Word on Wealth, but he's also my go-to guy for my very own Medicare questions.
Thanks, Marty. Today, people are wondering if they're making the right decisions about their Medicare and whether they're paying too much. When your 65th birthday approaches, you can count on one thing. You're going to be bombarded with Medicare ads and solicitations. My goal is to save you time and money and give you peace of mind of making your Medicare decisions. I'm local and accessible and just a phone call away. So you can relax knowing that you'll have the Medicare plan for yourself and for your family that fits your financial needs.
Call Jim Robison, the Medicare Answer Guy, at 858-935-9120. That's 858-935-9120. 120, tell them Marty sent you. Learn more online at themedicareanswerguide.com.
From San Diego, this is the Word on Wealth Financial Network. Call and ask your questions about effective stewardship in your family finances, business, and retirement.
Right. Welcome to the Word. Welcome to the Word on Wealth. Today, sponsored by GQ Law. This is Gary Quackenbush.
Rich Mathurin.
And Edgar Hernandez.
All right. We're here as a team from GQ Law. And I wanted to kind of finish up right before the break. We were talking about the annual gift tax exclusion. And just briefly, it's $16,000. What that means, it doesn't mean you can only give away $16,000. It means that if you do give away $16,000, nobody knows about it. It doesn't get reported to the IRS. It's not a taxable event. If it's over 16,000, then it's reportable. It's not taxable, it's reportable. Okay. Until your gifts that you're giving away exceed $12 million in your lifetime, there's no tax on it. So gift away, folks. If you're worried about having too much money when you die, gift it away. 16,000 or less is not reported. Anything above that is, but still you got to get over the $12 million limit before it becomes taxable. Okay. So talking specifically about tax situations, let's just say for Rich, somebody comes into the office and they have pretty typical, they'll have a bunch of IRS notices. They'll be in an envelope like certified mail, the green, certified mail printing on it or the sticker that's on it or something like that. And clients tend to be really freaked out about it. But I want to go into specifically just some kind of general ideas. If somebody has, whether they've filed or not, if they have the IRS coming after them for whatever number, let's just say, $25,000. Help us understand, is that a resolvable situation? Do they need to run and hide, or kind of what steps would you take them through?
Most definitely resolvable. I would not run and hide or bury your head in the sand. It's there are programs to deal with it. The IRS wants to just get you in tax compliance. And the main thing that they normally push people into is what's called an installment agreement. They have a program that they started called the Fresh Start Installment Agreement. I think it's just now a regular installment agreement. And basically, if your balance is below 25,000, you can pay it off your balance over 60 months. If it's 25 to 50, then you have 72 months. And if it's 50 to 100, you have 84 months. The payment, it's not just a straight calculation because there's statute of limitation calculations in there, but
so talk about that. You went over that kind of fast. So so if we're talking about, we know the 25, 50 and 100. So basically somebody comes in, they have $25,000. I mean, what is the process? Like, what are we doing to help them with that? I mean, we understand they can get a payment. I'm just trying to figure out, like, what do people expect?
Well, I think we need to make sure that they can afford it in their budget, the payment that the IRS is proposing. Let's say that it's $500 a month for 60 months. I wouldn't have the exact numbers, but
that would probably be about right. Because if they're $25,000 over 5 years, it's about 2%. So you get about $500 a month.
And if you can make that payment, the IRS does not require any financial information, bank statements, anything like. You don't have to prove your income. As long as you can make the proposed payment, they will generally set you up pretty easily. I believe if you're under 25,000, you can pay by check or by direct debit. But if you're over 25,000 in balance, they require a direct debit installment agreement.
And I think in that, would you recommend that clients agree to a direct debit installment agreement rather than write checks?
I think it's better just because, it's something where you can budget it every month and you don't have to worry about the IRS is just such a bureaucratic organization and payments get lost all the time, I think. And so I would, I think if you can swing it, I think that the direct debit is just the easiest thing for all parties involved. Also, one good thing about getting into an installment agreement is your interest is halved immediately once you enter the payment plan.
That's great.
Another big benefit is if your balance is 25,000 or less.
You mean the penalties are halved, not interest? Interest stays the same. Penalty
interest rate. I'm sorry.
Okay. So then, all right. So then 25, they do a direct debit installment. And the thing is, the reason we recommend probably something like that is because then if you're falling behind your taxes, it's we don't want you to get into the habit of doing it again. Because if you fall behind again, the IRS isn't very happy about
Yeah,
that.
that's a no-no. If you can't, it's not like a credit card where you can keep, adding
Right.
balances and they'll just keep you on the payment plan. If you add a balance for a future tax return and you don't pay it immediately, they will default to your installment agreement.
Right. Which means, and then they already have your bank information. So if they default, they know your bank, and then that's probably a bad thing.
One other advantage I'll mention to getting into an installment agreement, if you can get your balance below 25,000 and you make 3 payments under an installment agreement, the IRS will release any liens that they have filed against you, your personal property. That would be your residence, your bank accounts.
That's huge. That's a big deal.
But burying your head in the sand, the IRS does have a lot of tools on their own to collect from you, whether it's garnishing your wages, levying your Social Security, levying your levying your bank accounts. So again, I think it's better to have a known than have them sitting out there and taking money when you least expect it.
Agreed. All right. So let's talk about what if somebody owes $200,000. Now we're outside of the Fresh Start program. There isn't any set. There's no, not that any of that is set anyway. They have general guidelines. I think still get somebody that knows what they're doing, like us. And by the way, all this information, if you want this, you can go to our website, gqlaw.com, gqlaw.com. We've got brochures and books and articles. We've got a blog, these podcasts and everything to help you kind of understand how this stuff goes. So make that a good resource for yourselves, gqlaw.com. All right, Rich, let's talk about getting into where, some seriously big numbers. Somebody owes a couple $100,000. What are going to be, let's just say a couple $100,000, and this is over several years. So really there's a bunch of penalties and interest. They've kind of been getting chased around. Maybe they've successfully dodged the bullet, but now it's kind of coming to where the IRS is filing liens, now trying to go after bank accounts. Is there hope for things like that?
Yes, there are several different options that we could pursue. You can get into an installment agreement. It would probably be what's called a partial pay installment agreement, because you probably would not full pay your balance before some of them elapsed under the statute of limitations. To get into that partial pay installment agreement, you would need to provide financials. That would be filling out an IRS financial statement and possibly providing bank statements and pay stubs to verify your income and assets. That takes a lot more work on our behalf, because we need to call either the collections, or if you're assigned to a local revenue officer, speak with that person and kind of negotiate. And we also need to review your form to make sure that your numbers are accurate. I think that's important, because the IRS will call you on it if you take too much in expenses or don't declare all of your income.
So then from the standpoint of if the IRS is coming after, if somebody wants to know what's going on, they're getting letters from the IRS. So it could be that they're just getting letters from the IRS, but you'd mentioned there that you'd mentioned either 2 different ways that the IRS could approach it. Basically, it could be correspondence where they're just sending letters, final notice of intention to levy, they want money. And then you said that it could be automated, I think. And then you talked about the field. Can you talk about those 2?
I've had different conversations with local revenue officers and with IRS collections as to when how big an account has to be to be into a specialized collection department in the IRS, and at what balance they're assigned to local revenue officers. I think the amount may be around 200,000. It gets assigned to a local revenue officer. That's somebody that's here in San Diego or San Marcos. They have 2 offices in San Diego County, and a local revenue officer. We generally have relationships with almost all of them in San Diego County. And again, we give them financial statements, and it's a kind of a back and forth and trying to figure out, what the IRS will accept on the taxpayer's balance. And from our standpoint, what our client can afford. So, it's sort of a give and take. But I've had very good luck in working with these. I think as long as you kind of respond to their inquiries and get them the documents and, return their phone calls, I've had very good luck in setting up good partial payment installment agreements for our clients that they can afford, that gets them into the good graces of the IRS.
Okay. So sometimes you'll be working directly with somebody that's in the field. They're referred to as a revenue officer. They have the case usually typically directly assigned to them. That could be business taxes or personal income tax. And then you have, sometimes it's also just the IRS collections. That's what Rich is referring to, where it's more, there's a couple different divisions of that, but sometimes you don't have a direct field officer that's assigned. You have IRS collections. So there's an officer that's remote, not here in the field, not close by their home. And there's just kind of a little bit different operation there. So then the other thing, and remember, go to our website, gqlaw.com. Also, if you want a free consultation regarding this, you can go to that website too, gqlaw.com, GQ like Gary Quackenbush law.com. And you can get, there's a contact us form. And when you go there, you can contact us and get a free consultation to figure out what's going on. Now, so let's say, for example, a client comes in, they owe $50,000. They don't want to pay it. And we go through the analysis and look, and they've got a house with $500,000 of equity. They've got, $20,000 in their bank, and they've got a retirement account. Is it possible? Because how many times have you heard people that come in and say, well, I was told that I only have to pay 10 cents on a dollar. I only have to pay $5,000 to settle this. Yet we look at it and the equity in their house is like $500,000 and they've got some money in the bank. How true is it? You see kind of I don't know, it's a lot of promotions and ads saying 10 cents on a dollar, 10 cents on a dollar. What would prevent someone from actually settling for 10 cents on a dollar?
Well, I think you're referring to what's called the offer and compromise program. And I think there are some misleading ads out there by people. To qualify for the offer and compromise, you have to be able to show the IRS that you cannot, through an installment agreement or through selling equity in your properties, full pay your balance before the statute of limitation expires.
Okay.
If you can prove that, then you would be eligible what's called the offer and compromise program. So people with a lot of equity in home, large retirement accounts, high earnings, offer and compromise generally is not a good program for them. It is, simplifying things. It's about 80% of the equity in your assets. That's real estate equity, bank accounts, retirement accounts, plus your net income times 12. So it's a formula-based thing. But I think, people think they have $5,000 in there, that their grandmother gave them, that they can offer it to the IRS, and the IRS is going to walk away for that. It just isn't the case, folks. You need to go through, you need to see if you qualify for the offer and compromise program, and then do it properly, because the IRS has analysts, special analysts that do all that. That's all they do is analyze these offers. So if you submit a form that's incorrect or way off, the IRS is going to return it or reject your offer.
So then it's like, so what we're basically saying is that you have, it's not just we send in money to the IRS and they take it. That's not the offer and compromise. What Rich is explaining is that it's really not kind of making a deal with the IRS. It's not really saying, hey, I'll pay you $5,000 today, take it or leave it. That's not the way the IRS works. It's a matter of qualifying it. And sometimes the assets, like your asset value, that can be a little tricky. Sometimes there are ways to show that, realistically you have lower asset value than maybe it would look like in a fair market value calculation. But it's not a matter of saying, this is what I feel like paying the IRS. It's a matter of working the numbers to try to come up with the lowest number possible. And that's the thing with offer and compromise. They work great. We've been very successful in having people's liabilities compromised. So I think it's really worth consideration. The other thing, and we'll talk about this more when we get back, is if you are trying to get an offer and compromise, if you're trying to work a deal with the IRS and it doesn't work, it's not the end of the world. You still have the opportunity to have other options exercised for you. And it may be a payment plan, like we mentioned. It may be some type of a partial payment plan, or it may be, maybe it's refinance your house or something like that. But all those tools we have available to us, it's important to know what your options are. So call us at 855-500-TRUST, 855-500-TRUST, or go to our website at gqlaw.com, and you can find out more information about how all this works. You're listening to The Word on Wealth, and we've got two attorneys here, Rich Mathurin and Gary Quackenbush, and we have Edgar Hernandez. Edgar, you still there?
I'm still here.
All right. Edgar wants you to give him a call, 888-344-1170, 888-344-1170. Call in and be a part of the show. Okay.
From San Diego, this is the Word on Wealth Financial Network. Call and ask your questions about effective stewardship in your family finances, business, and retirement.
With SRN News, I'm Keith Peters reporting. As tensions continue to build over Russian troops massing at the border with Ukraine, Secretary of State Anthony Blinken warned Thursday that there would be swift, severe responses from the United States and its allies if Russia sends any military forces into the country. And Blinken has a message for the Russian people.
You deserve to live with security and dignity, like all people everywhere. And no one, not Ukraine, not the United States, not NATO or its members, is seeking to jeopardize that. But what really risks your security is a pointless war with your neighbors in Ukraine.
President Biden says any Russian troops movements across Ukraine's border would constitute an invasion, saying Moscow would pay a heavy price for such an action. This is SRN News.
From San Diego, this is the Word on Wealth Financial Network. Call and ask your questions about effective stewardship in your family finances, business, and retirement.
You're live.
The Word on Wealth is here to help you out. We've got our team of experts. We're here every day, Monday through Friday at 2 o'clock on whatever station you're listening on. We're also we're running it live on YouTube. We're going to run it on Facebook starting next week. We want to get this information out. And today, those of you that know me, those of you that are familiar with the show, those of you that know GQ Law, you know that we talk about estate planning all the time. Wills, trusts, successor trustees, inheritance litigation, fighting for your rights. That's GQ Law. A big part of what we do is tax problem solving. That's what we're talking about today because we're in tax season. So today is tax problem solving day. So we have Rich Mathurin and Edgar Hernandez, and they team to work our tax legal department. And so I wanted Rich and Edgar to explain more the process of kind of mechanically what we end up doing when we're doing like a payment plan or an offering compromise.
When we say that an offer would be a good course of action for a client, Edgar, what do we typically, how do you typically handle that after client has come in and they've engaged us and we're going to do an offer for them?
Yeah, so after that initial meeting and once we get all the background information and documents, we'll first set up a power of attorney. I think that's most essential. So that way we can access their documents and pull their transcripts and see how much they owe to the IRS or the California Franchise Tax Board. And then from there, we'll analyze their transcript and see what kind of options that we have for them. So in this case, you mentioned an OIC, an offer in compromise. And so one of the most crucial things we'll need is to send them the paperwork first, fill it out to the best of their abilities, along with giving us the requested documents. So that's like bank statements, car loan statements, payoff statements, investment accounts, assets, anything that they have. So that way it's all disclosed, and then it pleases the revenue officers, because the revenue officers, if there is one, or even just the IRS, can send it back, because if they get word of something else that we didn't disclose, then there goes the offer.
Now, that's an interesting point. So we're putting together the form, submitting the documentation, submitting proof, right? Don't we have to
provide, all the numbers have to match the statements, the documents.
So what happens? Everything's put together, and then lo and behold, the client forgot to tell us something. How does the IRS respond to having this asset that wasn't disclosed, Rich?
That's where I step in. I had one lady that neglected to tell me about a job and a retirement account that she had. I called the OIC specialist. She was located in New York, and spoke to her pretty much on a daily basis, got her the documents, sort of explained that it was a innocent mistake, and she accepted that. And we worked with her, and the offer increased. I think it was an extra $400, but we were able to settle about a $50,000 tax balance, I think, for $3,800. So the offer was $3,400. and it went up to 3,800. But that's really where I think I earn my money as an attorney helping clients, is working with these offer specialists, because they are, they very analytical about going through bank statements and pay stubs, and they have their standards that they have to allow the taxpayer to take on their expense budgets. So it's working with those people to kind of massage the numbers and get to an agreed upon, what the client's assets actually are valued at and what their net income is for the calculation. But I feel like, like I said, to me, it's more, you get more with flies with honey than with vinegar type of thing, and responding to their requests and working with them. I've had a lot of good luck in getting, even if the initial offer was low, negotiating something that was acceptable to the IRS, acceptable to the client, and settling huge tax balances for reasonable payments. We had one recently where a client owed $6 million, and the client was on a fixed income currently in sort of in semi-retirement, but we were able to settle the tax balance for $1,524. So it was just an amazing program. But I've settled $600,000 for, like 15,000, 300,000 for 30. A lot of good success stories, and it really, I think, changes people's lives. I mean, it really takes a huge burden off of them. But again, it does need to be done properly, and make sure that you have all your I's dotted and T's crossed.
And I think one of the things about having somebody that knows what they're talking about is if they're, because sometimes there are disclosures honest, where sometimes, somebody doesn't disclose something and they honestly think, well, that's not really an asset, right? And if I think if they're working on their own and they submitted that, the IRS is going to go, you're just lying to me. You're trying to cheat this thing. And yet we can step in as attorneys and say, well, they didn't understand that. We're helping explain. It's okay. It just really makes a big difference, I think, to get the right help. So Edgar, on the documentation stuff, what about what if the client doesn't have the bank statements that the IRS wants?
Well, that's not something that can really be negotiated. I mean, they need the bank statements to send them in to have proof of, what they have, if there's any income going into them, if there's any expenses that they're getting listed off.
I will say that I'll jump in here. Edgar is great at working with our clients to help them get access to information, whether it's bank statements, pay stubs, walking them through the forms to explain that to them. And he does a great job of that. And, your bank statements, maybe you have to go down to the bank personally or whatever, but we can help you get bank statements. We can help you get pay stubs. Maybe you need to talk to your HR department or whatever, but all the information is available. And I think, Edgar does a great job of walking you through the form and making sure that everything is neat and tidy before we submit it.
Mm-hmm. Excellent. Good point. Yep. So then offers now. Talked about payment plans, talked about offers and compromise, which are totally awesome. What about bankruptcy? Is it possible? Usually if you mention the word bankruptcy, most people's knee-jerk reaction is, oh my gosh, bankruptcy, who would do that? That I don't qualify. Why would I ever do bankruptcy? And then when you talk to them about the possibility that bankruptcy may be a solution to a tax problem, is that really true? Can a bankruptcy be used to get rid of taxes?
Absolutely. In a lot of cases, there are some exceptions. The most recent 3 years are not dischargeable in bankruptcy. If you have tax balances, like say for 18, 19, and 20, we would not be able to discharge those in a current year filing, but anything prior to that would be dischargeable. And also there is, if you did not file your own tax return and the IRS filed one in place, those years would not be dischargeable. But it's a very, very powerful weapon, because these tax balances, again, last for 10 years. The IRS can collect on them. But with bankruptcy, I've wiped out 600,000 for one client recently. Another client, I wiped out 700,000 in taxes. It's a very, very powerful weapon. And, the IRS really has to take it, as long as the rules are followed, the balances are dischargeable in a bankruptcy.
So they can be discharged if we have some rules that are specifically met, if they are more than 3 years old. So here's the thing to consider. If you have tax balances, or if somebody just brings it up in conversation, like, oh, I wish I could get rid of my taxes. These are taxes that typically have been filed. Maybe there was an audit that went the wrong way. Maybe that's why there's a tax liability, or maybe self-employed, maybe a result of a divorce or something where there's just some taxes that were not paid. They get bigger and bigger and bigger every year with tax interest and penalty growing. If those taxes are more than 3 years old, and that's 17 and older, right?
Yes.
Okay. So if it was a 2017 or older, and the returns have to be filed for at least 2 years, those are the returns that can actually be considered for elimination. The way we've seen that a lot of times is it's just a really old tax balance. It's just been around for a long time. Some people just struggle with, like, they really, really want to pay their tax. They had a really good year, and then before they could write the check for taxes, they had a really bad year and had to pay, oh, I don't know, housing, utilities, food for their kids. So they didn't pay the taxes. And now 6 years later, it's twice what it was. I mean, because that's realistic, right? If 5 years ago, somebody owed a $10,000 tax liability, which that's not hard to owe 10,000 if you're self-employed. You only got to make like 40. Okay. You end up owing 10 and you don't pay it. Don't pay it the first year. You got a 25% late payment penalty. You may file it late. There's a 25% late payment penalty. So now we're $5,000 of penalties, and then you got interest and all that. So in 4 or 5, 6 years, that 10 is going to be 20, and then you add another year. So it's not, when we're throwing around numbers and saying, yeah, somebody owes 200 or 400 or whatever, they're not unrealistic numbers if somebody had a business that was going and then ran into problems. Now, one thing to keep in mind is these are for 1040 taxes, personal income taxes, not payroll taxes. Payroll taxes are tricky. Payroll taxes you should never, ever try to do.
2 minutes.
You got payroll taxes. Those are some of the trickier ones, but that's tax is tax, and we can deal with it. The other things of the tax bankruptcy is one thing is we do have a book. It's called The Tax Bankruptcy. So if you're interested, we have an ebook. It's on our website at gqlaw.com. gqlaw.com. You go, it's an orange cover. If you're watching this on YouTube, you can see it's an orange cover called The Tax Bankruptcy. That gives you the rules, the requirements to get your taxes eliminated under the bankruptcy code. When you start doing stuff like this, when you actually can help people resolve problems, I just this week met with a guy that we've been dealing with for years, and he was so excited. He came in, it was
1 minute.
Kind of cool. He thanked me. He said, "You gave me my life back, and here are my new plans." And it was really cool because we'd gotten rid of his debts in the past. We've helped him with taxes. And he says, "You gave me my life back. Here are my plans." And so now we're going to help him do things like set up a corporation, and he's going to buy a house in another state. I mean, there's all these different things. And I don't know, it's pretty satisfying to help people with their stuff. You're listening to The Word on Wealth. We're up against a break, and we come back. We're going to kind of summarize what we talked about with our tax problem solving efforts. This is Gary Quackenbush, Rich Mathurin, and
30
Edgar
seconds.
Hernandez. And when we come back, we're going to be talking more about tax problem solving. If you want to get a free consultation with me, with Rich, call 855-500-TRUST, 855-500-TRUST. Call now. You can talk to our receptionist,
10 seconds.
Vicky, and tell her you want an appointment. 855-500-TRUST. And we'll be back in just a minute.
From San Diego, this is the Word on Wealth Financial Network. Call and ask your questions about effective stewardship in your family finances, business, and retirement.
We're with Craig Smith of Borderland, your local source for cybersecurity. So many employees work from home today. How does that jeopardize local companies?
So employees are using personal devices. They have personal email, and that's harder to control. That all means that your company and your computers are at greater risk of cyber attack. Why? Email phishing attacks often look legitimate. Something as simple as an Amazon Prime shipping notice comes in and then quietly infects, multiplies, and takes data, copies passwords, and puts you and your clients at risk.
So how can you help?
Hackers only need one employee to make a mistake. We come alongside you and help protect your small business and train your employees so that they can comply with insurance requirements.
Reach out to Borderland right now at 855-945-8100. 855-945-8100. Get a free consultation and a quick, affordable quote on software services that help protect you and your small business and complies with insurance requirements. That's Borderland, 855-945-8100.
We look forward to protecting you.
From San Diego, this is the
Gonna pot you up. Gonna pot you up.
Work.
Gonna pot you up.
Questions about effective stewardship in your family finances, business, and retirement.
You're live.
Welcome to the Word on Wealth radio show. We have three experts in the room. Starting with my left, you're an expert, Edgar.
A little bit, Edgar. That's me. I'm the paralegal.
Right.
Rich, the attorney.
Rich, the attorney, and Gary, the attorney. We all work for GQ Law. We all do tax problem solving. I used to. Rich is our tax problem solving guru, and Edgar is our tax. Edgar kind of does everything around here because he wants to go to law school. He's going to law school, studying for the LSAT. And assuming he doesn't pass, we'll have him here as a paralegal forever. If he does pass or do well in the LSAT, then we'll miss him while he's in law school. But all right, so we need a summary at the end of our show today. And folks, to look this stuff up, go to our website, gqlaw.com. You can find the tax bankruptcy book. It's free. You can find books about living trust basics, about forming corporations. There's brochures and articles on Chapter 7 bankruptcy, Chapter 13 tax bankruptcies, all that. You got it. So we are going to then summarize this last part of the show and ask Edgar to do that. Summarize tax problem solving. What are some of the basic options that are potentially available to people?
Yes, Gary. So, of course, for our listeners that have been listening the entire show, they've listened to Rich talk about different options depending on the amount of taxes that people owe. And one of the options after we diagnose their problem is an installment agreement. That's where we make a payment plan with the IRS, something that's comfortable or affordable for our, I almost said students, our clients, and something that will please the IRS. So that's kind of the basic of an installment agreement. The next option they have is an offer in compromise. That's where there's this calculation between how much they have in assets as well as their annual income. There's this bigger calculation, and it's let's say they owe 200,000, and then we submit an offer for what they can afford for maybe like 30,000. See if that works well with the IRS. If it gets accepted, and that's what they make, and then it turns into a payment over X amount of time.
All right.
And then we have a current non-collectible status. If our clients cannot afford a payment plan or an OIC, then this is one of the options they have. The IRS will stop collections on their current charges, their taxes, and that's it. I think I might be missing one more element to it, Rich.
Well, I would also throw in bankruptcy as a possibility. People, I think, are scared of the word bankruptcy and has a bad connotation, but it's a very powerful weapon in discharging tax balances. Again, there are several rules that you need to consult with a tax lawyer to make sure that your tax balances would be dischargeable in a bankruptcy. But if so, it's a very powerful weapon. And the process, if you hire a professional, I can walk you through and get you through all the steps, and we can get you your discharge. So I think that's a very powerful weapon too.
And I think the point is that you really need to find your options. Okay. And what we have found, over doing this, for many years, is that people's lives are based on relationships. Okay. Bear with me. You have relationships with your friends, with your colleagues, with your spouse, with your children, with your boss, all these. And what happens is when you have financial problems, whether it's tax problems or debt problems, and you're having trouble managing your money, think about it. We've been told from we were little tiny kids, it's like, wash that window for 10 cents. At least when I was a kid, it was only 5. Now Edgar is probably $20, but The thing is, we've been taught to manage money because our parents have taught us to manage money forever. So you mess up a money situation and you owe, you're behind on your credit cards. You didn't file your taxes. You're behind in your taxes. Like, it's really tough to deal with. It's just really hard to get your head around it. But what we do is help you figure out what options are available, what can be done, because tax problems are solvable, period. They can be solved. There's no tax problem that is too big. Sometimes the sacrifices you make are big, but it's not as big as fixing things to where you can get back to having the relationship with your kids and grandkids and your spouse and your friends and your work associates, because relationships are everything. And when you're troubled with money and trying to make ends meet, and then you fall behind on things, doing it on your own, it's
2
awful.
minutes.
So what we've established is this wonderful program at GQ Law where you get a free initial consultation. We analyze the whole thing. We'll look at your notices. It's not uncommon for clients to come in with notices that have never been opened, because there's this thing about, I don't want to acknowledge that the IRS is after me. And we're happy to open the mail for you and look at it. It's true, because we just work super hard to make sure that people can have their life taken care of. And we give you your options. And Rich and Edgar and I have been saying constantly, your options, whether it's waiting out the statute of limitations, doing an offer in compromise, doing a currently not collectible, doing a payment plan, doing an offer, a tax bankruptcy. Those are things, they're options. And you may not be able to do it right now. You may have to wait. So you may have 1 or 2 or 3 options in this plan, but we come up with a game plan. And once you know your options, you know which way to go. Okay. You know your game plan.
1 minute.
And you may have to work it. We're happy to do that with you. Come in for a free consultation, 855-500-TRUST, 855-500-TRUST. Call now if you've got friends, neighbors, or yourself, and you need to help with a tax solution. We are tax problem solvers here at GQ Law, 855-500-TRUST. Go to our website, get that free book, The Tax Bankruptcy. You'll learn about how bankruptcy works and how specifically tax bankruptcy works. There's other stuff on the website dealing with different types of bankruptcy, different types of tax problem solving. All that's available for you on our website at gqlaw.com. We are here every weekday, Monday through Friday at 2:00 on the same station. It's been good to have you along. Rich, thanks for being here.
Thank you, Gary. Nice being here.
And Edgar.
10 seconds.
Thanks, Gary. I'm glad I could be a part of this tax solving day.
All right. Tax solving day. We'll be back tomorrow, 2:00. Bye, everybody. Have a great rest of your day.
Nice.
Word on Wealth, featured since 1995
So, no, we'll
with
talk to you
financial
tomorrow, so
solutions
you're on with
attorney
me
Gary
tomorrow.
Quackenbush.
Yeah, I'll be on with you beginning of the show. We'll do all things happiness with Edwin, and yeah, I'll be good.
California
Right,
Society of Tax.
God, bud.